done. So now we're going to look at journalizing. And what the heck is a double entry accounting system? I bet everybody's asking that question, right? Okay, so double entry system is if I debit my assets, I must credit something on this side. Remember, we've got assets equal liabilities equal owner's equity. Okay, so if I debit here, I need to credit here or credit here. So we will explain that, and I'll give you some actual pictures of that in a minute. So that explains the double entry. Let's say I do cash and I buy land, okay? So I will credit my cash, which means subtract from that, which would be a credit, and then I would have to debit my assets to increase that. Or how about if I paid an accounts receivable? I would have to detract from here. Now, since I've subtracted from here, right, I'm going to need to subtract from here also. Would that be correct? So to subtract from a liability, I would have to debit. So I would credit cash and I would debit accounts payable. So you want to always keep that equation in balance. You're going to do the same thing for revenue accounts. All of these accounts will have to, you'll have one entry for one and another for the other in the same journal entry. So and we'll always use two accounts, obviously. If you have to balance it, you've got to have two accounts. Let's kind of look at this next thing, because this is probably the most confusing thing about accounting, is what are you talking about? So, a debit increases an asset account. A credit decreases it. Using cash. Cash is a perfect one because cash is just so material, so concrete. If I increase cash, I debit it. It's an asset. If I take money away from the cash, I credit the account. Liabilities are just the opposite. And that's because you have to balance between these two, right? So if I want to decrease a liability account, I would debit it. And if I want to increase it, I would credit it. Same thing for owner's equity. Look where it is. It sets on this accounting equation. Assets are always your mainstay, right? So your owner's equity increases with credits and decreases with debits. Now that's real easy. Debit, decrease, credit, increase. So you've got D to D and C to C here. This one over here is a little more difficult because it's kind of reversed. It's not exactly what you would think. Owners draw, debit increases it, and a credit decreases it. That's because it's something somewhat of a contra account on the owner's equity here. Now your income statements, this income statement is what balances everything. When you get all of the accounts together and you close the accounts and you put it all together, the income statement folds right into the owner's equity. So your revenue accounts are credited to be increased and debited to be decreased, and the expense accounts, which you subtract, right, are just the opposite. Expense accounts debit for increase and credit for decrease. Did I say that right? Debit for increase, see, even I get confused, and credit for decrease. So this is kind of something you might want to print out and know just to help you keep track of it. I believe it's in your book, so mark it or copy it so that you always have that to check. Now, that brings us to something called normal balances. Remember, I think in the first lecture I talked about cash always has a debit balance, or it should have. If it doesn't, you're overdrawn. Assets have a debit balance. Liabilities have a credit balance. Owner's equity have a credit balance. Draw accounts have a debit balance. Revenue has a credit balance, and expenses has a debit balance. Again, this frame you should probably put in a notebook so you can keep track of to help jog your memory of what's going on. Now, okay, so that kind of gives you an idea of what we're dealing with on the debits and the credit. Now, here's the other thing. You're going to be journalizing, and when you say journalizing, it's a fancy way of saying I'm going to be writing down transactions. And those transactions go into a journal. So a transaction is entered into a record called a journal. The process of recording a transaction is called journalizing. Duh. And the entry in a journal is called a journal entry, and you've already heard me talk of that a couple of times. So let's look at some examples. Transaction A. Transaction A is Chris starts out his new business and deposits $25,000 in a bank account for them. So here you've got a journal, okay? Step 1, you put in the date. Step 2, you write out the account. And what did I tell you about a cash account? It always has a debit balance, so you're going to debit to increase it. Now, since this is Chris's business and he's just starting it out, we've got to balance that with a capital. We're going to create his capital account. So right now, his equity account is $25,000. If you look at the accounting equation down here, we've got assets with, see little t account, we have assets with a debit balance, and we have owner's equity with a credit balance. So we're in balance. So that was transaction B. Transaction B is he paid $20,000 for land. So now land's an asset, correct? So we're going to debit the land to increase it in the account, and we're going to credit cash to lower that amount or to decrease it. So now that is a transaction that's within assets. So that's simply crediting cash and debiting land. Transaction C is he buys some supplies on account. Now, whenever they say on account, they're talking about accounts payable. So supplies are what? They're an asset. So they get debited. Accounts payable is what? It's a liability. So it gets credited. See how this is imbalanced? So we've increased supplies by $13,150, and we've increased accounts payable. Debit here, credit here. And this is a journal entry. Let's look at another one. Here's one for receive cash of $7,500 from a customer for services provided. Wow. So now I'm going to debit my cash. But what is this? This is a fee earned or revenue. So it gets credited. So again, if we look at the accounting equation, asset went up, fees earned went up, because owner's equity, eventually all revenue gets folded into owner's equity. So we're still in balance. Here's transaction E, and this is where we are paying some expenses. And we have a wage expense, the cost of doing business, a rent expense, a utilities expense, and a miscellaneous expense. Expenses need to be increased in the accounts, correct? By debiting. And we're going to credit cash because we paid cash for it. So we're subtracting from cash, so it's got to be credited. So again, the effect here, cash goes down. The owner's equity expense accounts now go up with debits. And let's look at F. F is looking at, oh, we paid creditors $950 on account. So remember that accounts payable we set up? Well, now we're going to reduce that by debiting it and crediting cash. Now, what does that do to the equation? Can you see this? Accounts payable is decreased and cash is decreased, so everything is still in balance. Do we have one more? I think we have two more. Okay, this one is actually recording the supplies expense. Remember we had supplies of $13.50. Well, they went out and counted them at the end of the month and only had $550 of them left, which means that they've used $800 worth of supplies. So now I have to debit the supplies expense and I have to credit supplies to deduct that. Again, what have I got? Supplies go down. This is an expense account, so it goes up with the debit. And one more here. He withdrew $2,000 for his own use. So we debit the drawing account and we credit the cash. Again, looking at the accounting equation, cash went down, owner's equity went up. So as you go along and remember these, that the two main things you're going to have to remember. One is the rules of debit and credit and the normal balances. And these are two, and then here's just the normal balances. You have to remember things have got to stay in balance with this accounting equation. So I hope this has helped.